What's up everybody, Tom here with another video. In today's video, we'll be discussing the latest stock market news moving the markets right now. We'll also be taking a look at our technical analysis levels for the S&P 500, Nasdaq, silver, gold, volatility index, and US dollar ahead of what is going to be another volatile week. We saw the stock market move up yesterday, but the question is, can it maintain that move? Stay tuned. Alright, well, as we like to do, guys, let's take a look at the heat map for yesterday and have a look at which sectors were moving. As expected, it's all about what has become considered a little bit of a defensive play in the markets when the recovery first begins, and that is stacking into semiconductors and stacking into the FANG stocks. We also saw a larger move in Amazon, which I think we've been really talking heavily about on the channel over the last couple of weeks. We've been talking about how Amazon's actually been sitting, not doing so well for the last 3 months. In fact, if you look at the last 3 months, return for Amazon, it's only been 4%. So that's pretty much what it put on yesterday. It was sitting flat yesterday to down. So you can see that sometimes it pays to look at heat maps like this just to get a bit of information about what might be happening next in the market. Well, let's now take a look at earnings report, and you can see why Amazon is up. Not only is it not moving much for the last couple of months, but we are getting our earnings report after the close Tuesday, along with Alphabet, and we've got Alibaba Group as well before the open Tuesday morning. So there's a lot of stuff going on in the stock market this week with earnings reports. Remember, Earnings Whispers, I'm not affiliated with them, but they have these great reports and these awesome images you can just have as kind of like a cheat sheet. So stocks, or the stock market in general, closed sharply higher yesterday as Wall Street tried to move past what they call the Gamestop jitters. Now, I'm not sure that this is really the reason why the market fell off. Some people are claiming that's because Wall Street was scared of short sells on a whole bunch of different stocks. I don't quite believe that factor. I think this is just another excuse for why they push it down. We do know that February and the end of January, generally during a new presidential year, are weaker. And I think this is just more of an excuse that's written up. If we take a look at what actually happened yesterday in terms of the short squeeze against the banks, we can see here that GameStop did not fare very well. I think this is part and parcel to the fact that we can't actually trade the stocks, guys. We are unable to actually get some of these stocks due to limitations through Robinhood and other brokers. I've myself received several emails that I mentioned in the last video saying literally we're banning pretty much being able to trade this stock whatsoever. The most disturbing part probably for holders of this with the diamond hands is that it was down after hours. Historically, during this bull run, we have seen after hours being fairly bullish into the close, and then usually sometimes you might have like a 30% down or a 40% down, but the after hours picks it right back up. It was unable to do so over this period. For the earnings beat data, before we get into the technical analysis, still at an 87% beat rate, so still looking very, very good. And in terms of other squeezes going on right now, AMC, BlackBerry, Nokia, all of those, they're just not moving as hard as possible. Again, they all suffered from being partially banned throughout a whole bunch of different sectors. I think it's worthwhile taking a look also at the silver one. I know a lot of people are thinking that this is a bit of a subdiversion, but I also do think that silver is undervalued overall. You can see here the ratio is changing quite drastically over the last week, and that the ratio has been as low as under 35 to 1 from gold to silver. This is something that you should always look at as a silver trader, because if the ratio gets too close to 35 to 1, that usually means that that particular move is absolutely topped out. And in fact, anywhere in kind of like this 50-40 range seems to be a pretty normal area. Always look at these types of bits of information to get some idea of where the move could go to next. Well, let's take a look at the technical analysis for the markets right now. Volatility Index started Monday off quite high. In fact, it almost made a new high above the 37 zone. Failed to do so, came back down, and now it's bouncing off this level. In fact, if we bring this down, you'll see here, this was previous resistances on the VIX, and there's some support there for the volatility. We need the volatility to remain here and spike higher if we are to see the stock market continue its decline through February. It's very important we continue watching the volatility index to find out that type of information. Another thing that we're going to need to continue to follow is the dollar index. Dollar index, inverse head and shoulders here. Very important factor, left shoulder, head, right shoulder. If you load up a US dollar Swiss as well, you'll notice it's already broken out. The US dollar is actually broken out versus the Swiss franc. Basically, what this is showing us from a technical level is if the dollar continues to go up, guys, what we're going to see is risk off. Resistance, 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 nice pattern. Basically right on the close here around this 91. If we get the break up, we expect the market to do something like this. Break up, come back down, retest. The 50 exponential blue line here will probably be meeting at the same time, acting as dynamic support, and then a movement up to 92, possibly even higher. This is probably my signal here, and the biggest signal that I'm looking at to show a precursor of possibly the stock market returning back down to the lows we saw on the Monday open, or possibly even lower. Remember, those weekly 20 moving averages on the stock market still haven't been reached, and that makes a very good case for a corrective phase during February. Dollar index is going to be one of the key market charts that we're going to look at and check out this 91 zone over the next 24 to 48 hours. On to other things. Silver, definitely one that people are watching. Silver has continued to struggle at the 30 zone. We've talked about several times in our last video how if silver gets past 30, it's going to probably go ballistic. And it failed to do so twice yesterday. It kind of tapped just over 30, but didn't get the close that we need. A close candle, if we got one above 30, would trigger a whole bunch of buys and a massive squeeze on this particular pair. If we think about what's going on right now on the 1 hour, it's kind of like a little head and shoulders, left, head, right shoulder. Silver traders do not want to see breaks underneath this 28 zone where the 50 exponential is. If that happens, it would probably trigger quite a lot of selling back down to where it all really began around this 25, 26 area. So silver must buy right now if it is going to be successful through this move. Longer term, it might be successful anyway, but if this squeeze or whatever it is right now is going to happen, it must go for now. Just to remind everybody of the dangers of some of these things going on right now. We've seen what happened on Gamestop, but this is also a classic case of something that happens. This is Ripple here. If you trade cryptocurrencies, you'd be familiar with XRP. I just wanted to talk about pump and dumps and how you can tell whether something's going to pump and dump. Generally, it's in the back history of the chart. We know that this stock or this particular cryptocurrency here actually pumps and then dumps. It has a history of doing so, and it did so again over on the right here. If you go through history as well and you pull up all the pumps in the past, back in 2017, back in 2018, pump, then dump, pump, then dump. It's been very, very, very consistent with that, and it's a good little lesson to learn when you're trading these pairs. Always look for that pump and dump kind of mentality. The other one, gold. Gold, very strong resistance at 1875. I really like this level. If we can break above that, I think 1900 is likely from a technical perspective where there was previous resistance across here. We've talked about this level before. Resistance with a heavy sell structure in it with that big wick candle. That means that if you get past this level and close above, all of a sudden you're pushing against all of those sellers that are here, taking out their stop losses, and generally the market will try to fill to the next zone. So still, from the bullish side here, a break 1900 and then possibly even the 1950, 1960, as gold is severely lagging silver's move right now due to, of course, what Reddit's been doing, supposedly, but also just the general internet with bullion buyers coming back in force. I think a lot of the bullion buys are the older generation as well, but it doesn't matter who does it. The main thing is that people are believing in something and they're pushing it in that direction. If we have a look at the S&P 500 and the broader markets, basically we now have our monthly pivots open. The monthly pivots give us a good idea of targets for the month ahead. And I think there's some really interesting levels here, mostly on the downside. You can see here the monthly S1, 36.28. We go down a little bit more, 35.41. Check this out. This is literally a very great level because we have resistance, acting as support, a monthly R2, definitely a key zone to be looking at in the markets. We've opened up right on the central. You can't even see the blue line here because the price action's in the way of it. And we know that we also have our monthly R1 sitting just below the previous highs, sitting around 38.34. So some pretty key levels opening straight away on the SPX, and we'll be continuing to watch those throughout the next couple of weeks. From what happened yesterday, well, we had the selling pressure come in the first hour. We know that that's when generally the retail traders are trading, like you or me, and the pressure was there. The problem was we failed to make a new low after getting that pressure candle through, and of course it got broken straight against. Now, as the time of this recording, we're pressuring the top again, and of course, this is not good for short sellers, for people that are looking for the correction. From a price action standpoint, everything was going well with a lower peak, a lower trough, a break below, and then all of a sudden, things have changed. And this just shows that the market's a little bit irrational right now from the technical analysis perspective. And now that we're breaking high here, if we do so, we probably go back up to this level up here, which is around that 38 kind of 20. And this becomes, if we get past here, all of a sudden we probably snap to go to new highs. So things could be very, very bullish here on the market once again. And it all comes down to, again, the next 24 hours really in the stock markets. I'm going to be watching the S&P 500 very closely. We get back underneath the 3740, things are looking very bearish again. But as it sits right now, it's kind of neutral to bullish. And that's not necessarily what we wanted to see right now. And hopefully we do get a little bit of a turnaround, because I think it's healthy to have a correction here. It's a great time to have a correction. It's healthy, and we need to see these things happen in the markets. Nasdaq, very, very similar. What goes down very quickly comes up very quickly. We got the 13,400 being the resistance here. If the market's able to get there during the Asian and European futures session, expect some selling pressure off this zone. And it really bounced up heavily. That was a huge amount of buying coming into those stocks. It's looking bullish, but this is going to be the war zone for later on tonight. Another thing I mentioned before is with those monthly pivots opening, and you can see here on the weekly, if it was to get back down there, we'd be going basically back to the resistances and the support. The 20 exponential moving average, however, didn't even get reached. That's 36.20. I really expect during any major correction right now for us to at least reach this 20 exponential moving average. And if we don't do so, we're really not putting the pressure on that I would expect during a proper correction. And that just means that there will be even bigger correction next time round. If this is all we get, next correction is going to be even bigger again. And the reason why is because you need this kind of backward step, forward step, then of course the movement up. So I thought I'd finish up this video, guys, by just quickly letting you know about Unbiased Stock. I'm not affiliated with them. I just think it's kind of cool. You can see the Reddit trending stocks, Twitter trending stocks, Google trending stocks, etc. from the website. Definitely support the person who made it. I think they've done a good job. And a lot of these websites have been banned over the last couple of months. We used to have one that followed Robinhood, which was really cool, and a few others. So if you enjoyed this video, please remember to give us a big thumbs up. Make sure you subscribe and of course hit that bell, and we'll see you in another video covering the markets. Good luck this week, guys. It's going to be a very interesting week, and it's definitely a little bit tough out there due to so much uncertainty across the markets. Not usual, and the technicals are showing that. These not as good as they usually are. Look at the dollar index. That will be the key. Bye for now.